If I have learned anything in the past 9 years of trading, it is the very fact that following the trend will make you a ton of money and betting against it will blow your account. So in today's video, regardless if you are brand new at trading, maybe you're a complete beginner just getting into things, or maybe you are a seasoned trader who might have been watching my channel for a while, I think all of you could find value in the simple things I'm going to teach you today, because simplicity in trading is key. You do not need to overcomplicate trading, and sometimes going back to the basics can be actually extremely useful for your mental sanity. We consume so much information on YouTube. There's so many indicators, so many trading concepts and styles that my goal has always been to keep it as simple as possible. So with that being said, in today's video, I'm going to show you guys 2 simple ways that you can identify trend when you're trading and prevent yourself from betting against it, which is really important if you want to not blow your account, because I promise you, betting against the trend will quickly blow your account and some. Been there, done that. And so I want you guys to not do that. Hence today's video.
Okay, so step number 1 is you guys should obviously know how to draw a trend line. And I'm assuming if you're watching this video, you at least know that. If you don't, we'll do a quick refresher and then move on to what are these 2 lines on my chart. This is the first way I'm going to show you, and then the second way I'm going to show you is in part 2. So there's 2 different ways you can do this. Now, these are going to be in combination with just normal trend lines, right? So trend lines can be very subjective. What does that mean? Well, that means you could have one person draw a downtrend from here all the way over here, and then you could have another one say, oh no, that's not right, and then they come and they just have this trend line drawn on their chart. Me, I personally like to do both, so I like to draw major trends and then branch off, but they're not exact, right? So even if you generally have them in the same place as, let's say, your friend Bob could be trying to take the trend break here because he doesn't think wicks should be included, where Sally is trying to take the trend break here because she thinks wicks should be included. So that's what I mean by subjective. You can move them to kind of fit your bias, right? So these things you're going to be able to layer into basic trend lines to help you be able to follow the trend more clear and just give you some extra confluences to watch for. Now, I do want to start off by saying I myself don't use these anymore, and I will explain at the end of the video why I don't use them and what I use instead. But at one point in my trading career, when I was just starting out, I did use these and I found them very useful, like training wheels. So with that being said, it doesn't mean these things don't work. It just means I no longer need training wheels because I've been watching the markets for 9 years straight. So I could just have a clean chart and understand price action alone. Indicators are lagging price action, so keep that in mind. But again, these are great training wheels if you are just starting out or just need to go back to very basics and simplify what you are doing. So we're going to turn these red to signify a downtrend. And now what I want you guys to see starting off this morning, the first thing that is so important, this is actually a tip I didn't plan on adding, but I'm going to add it anyways. Do not try to understand the trend of the day before 10 a.m. Eastern. 10 a.m. Eastern is true trend. I'm going to say that one more time. Do not try to analyze trend before 10 a.m. If you trade something like orb, which I will be planning on making future videos on that as well, breaking that down and how I potentially like to trade it, or, you know, we also are coming out with orb indicators. We have so much cool stuff coming out over the next couple of weeks. Speaking of, if you guys want to be updated as soon as we publish new things like our custom orb indicators, trading strategies, workshops, free workshops, all these things that we put out, we are literally always coming out with new content and learning material for you guys. If you want access to that, make sure you don't miss it. Sign up for our free investor newsletter, and then you'll also get a free weekly recap of what's going on in the market. So it's a win-win. And again, it's free. Just look in the description box down below to sign up for that. But today's lesson, getting back on track, is all things trend. So first, just ignore anything before 10 a.m., okay? If you're talking about trend and you want to simplify your strategy and you want more clarity, wait until 10 a.m. or after to view the full trend of the day, okay? So you can see this morning at around 9:45 to 9:50 into 10, we got an uptrend, right? You might be thinking to yourself, well, that was easy. I could have just went short whenever the trend broke. Yeah, you can definitely do that. You can absolutely go short or go long when the trend breaks, and or take continuation as long as the trend is in your favor. But sometimes having extra things like these lines on your chart can help you see things more clearly when maybe the trend isn't that clear. That is going to be the moving average exponential, okay? So the 9-day EMA and then VWAP. With VWAP, I remove the upper and lower bands and I just have the regular VWAP, and that's yellow. And the moving average exponential, I just have it at 9, and that is blue. Now again, this is 9-day EMA. There are other types of EMAs and SMAs, but for this strategy and this example I'm showing you guys, it's the 9-day EMA and VWAP. Okay, so now that you have that on your chart, I also want to highlight, do not go under a 5-minute time frame. You should only be using this on a 5-minute time frame or higher. Now, for me, I personally like the 5-minute time frame. That's mainly what I execute on, depending on the day and the volatility, but 5-minute is pretty much my bread and butter time frame, okay? So these will change as your time frames change. So again, do not go underneath the 5-minute. It's going to be too noisy. It's not going to work. Also, trend lines are very rarely going to work if you're underneath the 5-minute because you're going to get chopped out. You're going to get faked out. Do not go underneath the 5-minute, okay? 10 a.m. or after, avoid anything under a 5-minute time frame. You got your basic trend lines. So after this uptrend broke and we started into a downtrend, you might be second guessing yourself, right? That's usually what happens. And so the best way that I like to do this is let's just act like we have no idea what is going to happen, right? We've got the trend line that broke and all of a sudden we see a doji, which again, I've talked about these. I have so many videos that you guys need to watch, but doji is a great sign of potential reversals. So that's another thing in our favor, okay? And there's always things you can layer in, like I've got a key level at 67.56.95. You know, failing under that would be another confluence to go short. But again, keeping this simple, I'm actually going to remove that. Okay, so uptrend breaks. We are now consolidating, and at this point, if the uptrend has broken, you would most likely be looking short, right? If the uptrend breaks and you're looking to trade trend, I'm a big believer that reversals in trend are still trading trend. I think a lot of traders get that mixed up where they think reversal traders are betting against the trend. I don't think that's accurate at all. I think once the trend changes, you need to be able to adapt to the new trend that is developing, aka a reversal. With that being said, the way that I want you guys to use these as training wheels is understand, one more time, VWAP yellow, 9-day EMA blue. The 9-day EMA, in my head, the way that I explain this to new traders, is the 9-day EMA is going to give you a visualization of trend. And what you want to do is watch price around the 9-day EMA. So a simple explanation of that could be if price is over the 9-day EMA, and I think I'm just going to refer to this as the 9 because that's too many words for me to say over and over, and I do know I repeat myself, I'm sorry. So if price is over the 9, aka the blue line here, then we are bullish. If price starts to close under the 9, we are flipping bearish. That's an easy way to start this off, right? So if you can ingrain that in your brain, price over 9, bullish, price under 9, bearish. Now, we can see a perfect flip of that right here. So we're bullish when price is above, okay, we're in that uptrend, price is above the 9. Then we start to consolidate and come down, okay? Do you see how price, the candle bodies were holding over the 9? So at this point right here, between these two candles, technically speaking, price is not really in a downtrend yet per the 9, okay? We're in a downtrend per the trend break, but this could have just been a small pullback and not an actual reversal to the downside. So the next thing you're adding with your trend lines is this 9 to confirm or deny your thesis. The thesis being if it's just a pullback, we will pull back to the 9 and then do something like this. So if it's just a healthy pullback, we'll pull back, we'll consolidate, form support, and then continue upwards, right? But we did not do that. We pulled back to the 9 and we started to attempt support, but we eventually failed and started to close below. Do you see how the candles flipped? So candle bodies are no longer closing above, they are now closing under. That is a flip from bull to bear, okay? That's a flip from an upside looking for long trades to a downside looking for short trades. Now to layer this even further, we've got VWAP. So I used to teach VWAP and I still do when I do lessons like this that are very beginner friendly. VWAP to me in my brain has always been homeostasis. It's a baseline, meaning if the market goes way above VWAP and we're just way high, eventually it's gonna wanna come back down and touch it. It's homeostasis. It's where a healthy market will lie, right? And so eventually it likes to come back and touch it to maintain balance, let's say. So if we're too oversold, eventually we might want to come back up to touch it from the downside. So it likes to gravitate towards VWAP. And you can see this morning we actually had a really nice bounce off of it. But one thing that you can also use for confirmation on bullish versus bearish is where is the 9 in reference to VWAP? So if the 9 is above it and price is above it, always think of price, because price and 9-day EMA are the same thing. 9-day EMA is just a reference of 9 days worth of data of price. So it's giving you that average, right? So if the 9 in price, aka candles, are closing above and they're holding above VWAP, you're generally bullish for that day. You should be looking for continuation long trades as long as we hold support. So what could that look like? Well, let's say that we came all the way back down to VWAP and you were short, hence because we broke an uptrend, we started to consolidate, had a doji, and then we started to move below the 9. So the next target down is VWAP, which acted as support this morning. Now, when we get to VWAP, if you see something like this happen, and again, we consolidate, and then we start to move up, okay, you're back looking for long trades, and that was just a pullback to VWAP. However, if we are very bearish, then we will fall under VWAP, and the 9 will also cross under. That's exactly what happened right here, and we continued bearish all the way up until, it was a really bad day, very bad, until my next key level of down here. But again, just to keep it simple, we're not going to do any type of key levels. So, and then I had another KPL of 66.76. You can layer things in like key levels, KPLs, and that's more advanced. But just the basics can also be sufficient, especially if you're struggling. You do not want to overcomplicate your strategy because you're not going to be able to execute it properly. So ideally, you can see all day today, we stayed bearish because we stayed under the 9. So ever since this morning at 10:15, again, wait till 10 o'clock prints, see true direction, which started to print around 10:15. We saw that trend break and a nice move all the way in to 115 here. And guess what we did? We held under and respected the 9 EMA the entire time. We came back up, but what did we do? What did we do right here? Did the candle bodies close over? No. So we're still bearish, right? So this is a really simple way to help yourself not bet against the trend and or identify what a pullback in trend or a complete reversal in trend can look like. So right now, I actually think this might be a really nice way to show you guys how we could take a trade, and maybe I'll try to take a trade with you guys. Let's see really quick. It is later in the day than I usually do, but we've got something good happening. First, I can show you why trend lines alone might not be that useful sometimes. If I was to draw an uptrend from here connecting these two touch points, right? We broke that uptrend right here, stalled out, stalled out, stalled out. We're still stalling out, but we haven't dropped yet. So if you would have just taken this trend break and maybe risked like right in here, you would have already been stopped out. So again, just trend lines alone isn't the most effective way to trade in my opinion. Now, if you can combine it with other confluences, like for example, if we started to close under the 9 EMA again, that could be a sign that we're actually flipping bearish. We do have a top trend line of resistance right here, so that's another area to potentially watch. And for me, my KPLs are key. So the only way I'm taking a trade is if we're near a KPL, and then I've got everything else in alignment. But again, I'm trading in a more advanced way because I've had a lot of experience staring at markets. So the second way that you guys can make sure that you are following trend is by adding a 4 and a 9. So some people like to use all three. You can use a VWAP and both of these EMAs, but you could also do either or, because I don't like to crowd my chart too much, right? I don't like a ton of indicators. I'm going to leave my futures broker up just in case we do get a good short entry here. But the 4 and the 9. So it's not rocket science, because all you're doing is looking at 4 days worth of data and 9 days worth of data. And that's telling you the trend, right? So that's another way you can help see trend, is by adding the 4 and the 9 on your chart. If the 4, which is orange, is over the 9, which is blue, then we're in a bullish uptrend, okay? You see how the 4 crossed the 9 here? Bullish uptrend. If the 4, orange, is below the blue, we are in a downtrend. So that's another way that you can help. Do you see how we crossed above, we're up, 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 but then right in here, the same time price started to fall below the blue, the 4, orange, also crossed below the blue. And so it's just another way to confirm if we are in a downtrend or uptrend. And so you can see we crossed below right here at around 1050, and we stayed below all the way up until 1340, so around 140. So one more time, you can use VWAP, which I'll actually bring that back on. You could use just the 9, you could use the 4 and the 9, but these are all great tools just to help you identify Where is the market at? What is the sentiment of the market if you, again, are new or maybe just overwhelmed? Maybe you need those training wheels back on your chart because you keep betting against the trend. Maybe you're having a hard time with just trend lines alone and you want to add some extra confluence to your chart. We can add all three up there. I don't like how close the orange and the yellow is, but whatever, you guys can see. So one more time, VWAP is here, 4 is orange, blue is 9, and so far, like I said, we were in that downtrend, but now we've broken that downtrend. So since we've broken that downtrend, we could very well go up and tap VWAP again. But at this point, I'm going to ask you guys something. Is it a good idea to get in right now? I really hope you guys said no. Why? Why would you not want to get in right now? Because if we did hit VWAP, your target is this tiny, okay? Versus if you would have got in when you were supposed to, your A+ entry down here, you would have had a target that was this big, right? So just be very careful chasing tiny continuation moves. If you're like, oh yeah, it looks like we're going to VWAP, we broke this downtrend. We could, or we could do something like this, right? We could wick up just a little bit more and then boom, back down. So I don't like the risk versus reward at this point. I think we're a little bit too overextended, and you have to pay attention to that in trading. You have to pay attention to where are we overextended, where are the discount buy zones, and again, you can find discount buy zones just by doing stuff like branching off your trend lines, because you see how trend really started to drop off here? If you would have waited until this trend broke or this trend broke, you're way late to the party. So branch off of your trend lines. Also, pay attention to when we're doing things like the price is reclaiming an EMA. So when candles start to go from closing under to closing over, that's a sign of a potential reversal. Or if you're somebody who likes to trade continuation, wait for a candle or two, then combine that with the trend break, and boom, you've got double confirmation. You've got the cross here, you've got price closing above your EMAs, you've got a downtrend break, and then you can have a nice trade up on reversal here. So there's multiple ways that you can do it, entry and exit, and just to give you guys an idea on risk. So for example, in this play, I like to risk the candle that is breaking trend here. So risk not right at it, but right below it here. And then your entry would be somewhere in here to here. And then target obviously is going to be your next upside downtrends, which are here and here. And then potentially VWAP, which we might go and tag. I'd love to see if I can take a trade with you guys. So right now we're hitting VWAP. We attempted a trend break. We consolidated in like a doji and then pushed higher. So I'm just still watching. Now we're going to adjust this trend here. So let me go like this. Adjust the trend line because we attempted to break, failed, pushed higher. Remember, trend lines can be very subjective, so you want to be careful just trading trend lines. But now we have another area of interest, which is VWAP. So let's see if we reject VWAP here. I also just added another level that I've got around, so this is now a really important zone here between 67.09 and 67.08. Next level to the upside if we break VWAP is 67.2297. But let's see, we are stalling out here. So far, it looks like we're going to my next level of the upside of 67.2297. However, if we reclaim VWAP, I'm not going to be too interested in shorts. So the most ideal situation is we get some heavy selling pressure stepping up really soon over the next couple of minutes. But you guys see how far we're getting from the 9? That means price getting pretty overextended, which you don't want to chase when the price gets too far from the 9. You want to make sure you're locking in profits, because it is very likely that we will retrace to it. I used to do that a lot too. It's just scalp to the 9 when we got overextended from it. All right, candle closes now. We need heavy selling pressure stepping in really soon here. If we start to move back below VWAP here, I'll take it short. And why is that? Because I'm expecting sellers to step in at VWAP. I also have that other key level here. So multiple confluence area. That was really good selling pressure.
Order filled.
I'm gonna take a starter, which is half size. I like that.
Order filled.
All right, I'm in full size. Risk is the high of these candles, right near 67.22. So a little bit above the high, and now we need to break this uptrend. It's really important that we break this uptrend. And again, what am I looking for? I'm looking for a retrace down to the 9. I absolutely love to repeat myself just to make sure you guys fully grasp this, but one more time, the reason that I am looking short Me personally, on my strategy, the most of the weight is coming from the fact that we're pretty close to a larger KPL, 6722. But if you didn't have those in your chart and you were just using what I'm teaching you guys today, then you can use the fact that we have the 9 underneath the VWAP. Price for majority of the day has been bearish, hence under the 9 and under the VWAP. So that is telling you, now that we have already seen the cross, we reclaimed 9 and we had that uptrend, I would rather be looking now to see if we can reject VWAP, which is exactly what we're doing right now, and look for a reversal to the downside. Because as long as price is rejecting and staying under a VWAP, we're going to continue bearish most likely until the end of the day. So always keep in mind that larger point of view. Yes, right now, since I'm zoomed in, we're in that uptrend over the 9, but the 9 is still under VWAP, right? So larger point of view, if the 9 is under VWAP, if price has been rejecting VWAP and we continue to do so now, that's telling me price is still bearish and I need to focus on short entries now, especially if we're breaking this uptrend, right? Especially if we come back to the 9 and fail to hold over. Now, if we come back to the 9 and consolidate and the candle bodies keep closing over like this, then I need to exit any type of short scalp. Because why? Because price in the short term is still bullish and it was just a nice scalp back to it. So keep that in mind, regardless of, how you're trading. It's always a good point of view to say, okay, where are we in reference to big trend versus minor trend? That's how I like to think about it. Minor trend is up right now, but that big trend is still very much down because we have VWAP right here and the 9 is under VWAP, right? So in my head, that still means that we very much need to be looking bearish, especially if we are near VWAP and seeing rejection type price action. And keep in mind, it's always really nice to see a back test on trend breaks. We never got that back test right here. So in my opinion, it's very valid to think about getting a move all the way back to this trend break to back test it and see if it's valid and going to hold or not. We never got that, so that would be my third target to the downside. 9 KPLs, back testing trend break. There's our 9 touch here, so let's see how we react. I'm up very nicely on this scalp, so I might, I'm gonna leave it. What we don't wanna see is the 9, we wick off like this. I don't wanna see that. So if we start to wick off, I'll most likely hit the close button. I'd rather see a push through and no wick here, and that would tell me that we are confirming next level down 6709 to 6708. That's a really good sign. You see how there's no wick there, just straight through it. And look left, you can see what bullish price action has looked like before. Every time we even got close, we were wicking off. This is not very bullish. I'm really glad I caught this to end this lesson because this is a really, really good live trade here. And a great example of showing you how important it is to interpret the entire picture. Don't just get married to, oh, I'm going to continue to buy if we're over the 9, or oh, I'm going to continue to, always sell if we touch the VWAP here. Remember, pay attention to reactions. The candle came in, the candle closed on. The next candle failed to break prior candle high, moved all the way back down, broke trend. That's bearish, right? The candle came into VWAP. I don't know how this is going to print. We could print bullish, right? If we print bullish and the candle body's holding over and we do have a very long wick, I probably need to exit because that's giving me a sign that 9 is still holding. If we close on or under, I'm in the green to continue to hold my short. But notice how I'm not just automatically reacting when these levels are hit. They're training wheels. You still have to interpret and understand price action. Price action is always king when it comes to trading and being able to scalp and day trade. I'm not gonna lie, it's a little bit later in the day. This has turned into a really long YouTube video, so I might hit the close button pretty soon. Okay, that's the push up, didn't last very long. So we're gonna go 67, 40. I'm gonna go ahead and move that down. I'm gonna suffocate it now. And this being a double level for my KPLs, I'll probably just hit the close button. And I'm all out. That was like over $4,500.
So this ended up being a way longer YouTube video than I expected. I did not plan on live trading. However, I just saw an opportunity and thought it'd be really good to show you guys live because y'all always seem to like that. My thought process, why I'm entering, how I'm managing my position, all of those things. So if you guys enjoyed this, please hit the thumbs up button. Make sure to subscribe for more. However, if you want more from me, because I can only put so much free content on YouTube, I do have a Discord community that is packed full of education, education. I have an entire team. We have everything from option swing trading, AI scanner bots to find the hottest plays, all the way to what's going on in the economy with economic data, tariffs, China wars, all of those things. Keep you in the loop with the need to know, because that can affect things like gold when you're trading futures. And then moving into futures and how to pass prop firm challenges. I just had a student get over 12,000 in payouts, which I'm super proud, using just our strategies alone. And we have way more success stories. You guys can view all of those down in the description box down below by clicking the link to see what we have to offer. Again, we have all of our education courses, team members, Discord community, everything you can need to be a successful independent trader is in that mentorship. So if you do want more from me and my team, make sure to check that out. Peachy Trading School for futures, but if you want the lower tier just for option swing trading, there is an option for that, no pun intended. But if you just want free stuff and you don't want to do anything paid, that's completely okay, because in the beginning, that's exactly how I learned everything. In the first 2 to 3 years, all I did was nonstop consume YouTube videos. So I'm going to do my best to continue to post high quality, simple, and easy to understand content for you guys. So make sure you hit that notification bell to be updated when we post our next video. And with that being said, I appreciate you all so much for watching, and I will see you next time.